What is up everyone? In today's video we're going to talk about Dropbox, ticker symbol DBX. If you find any value in this video, all I ask you is to please smash that like button for the YouTube algorithm because it tremendously helps this small channel out. Let's waste no time, here's the format. In part 1 of the video we're going to have a brief overview of Dropbox. Then in part 2 we're going to talk about a few of my concerns with Dropbox. In part 3 we're going to take a brief look under the hood at the financials. In part 4 we're going to talk about a few catalysts for Dropbox. And finally we'll talk about what am I doing. Let's start with a short overview of Dropbox. I am making this short overview because not all of you might be aware with the entire new suite of products and services offered by Dropbox. The first product that made Dropbox popular was the 2 GB cloud storage for storing, managing, and sharing data. Nowadays, Dropbox extended to what it calls smart workspaces, where it offers more services on top of the original cloud storage service, like eSignature through HelloSign, their recent acquisition from 2019, password manager that syncs across devices, a vault for secure storage, automatic backup, large file transfers, papers, a similar feature like Word on Microsoft Teams but much cooler. And on top of all this, Dropbox also has some other features that it offers for enterprise customers but also for individuals. Now with smart workspaces, Dropbox is also trying to get some market share from Microsoft Teams but also from Slack and DocuSign, because now with the features that it offers, it competes with all those three combined. One advantage that Dropbox has is that it's an open ecosystem and works seamlessly with other products from competitors including Microsoft, Apple, Zoom, Slack, and Google. So on top of the fact that Dropbox competes with those, it also is an open ecosystem and it allows users to use the features offered by Dropbox no matter the platform that they use. This is a plus for many people that use different platforms like Microsoft and Mac or Microsoft and Apple, because it allows people from different platforms to collaborate through a single medium. It basically allows cross-platform collaboration. Now let's move on to part 2 and talk about a few of my concerns with Dropbox. First, from the 600+ million users that Dropbox has, only about 15 million are paying users. While this is not amazing in terms of conversion rate, it also gives Dropbox the ability to improve a lot in this area and to generate more future revenue. For example, through the acquisition of HelloSign, Dropbox is now able to generate more revenue from other services like e-signing. So I hope to see some improvement in this area. The second concern that I have is that from those 600+ million users, a lot of the users are only individuals that use the free 2 GB cloud storage option, at least for now. But again, Dropbox seems to have taken a step to improve this thing because they came up with smart workspaces, which is going to increase the conversion rate, and now Dropbox is offering more services and more value for the paying users, and this could determine a lot of people, and including individuals, to switch from a non-paying to a paying version of Dropbox. Also, Dropbox started targeting more enterprise customers through the smart workspaces feature, and it started to already close some contracts with some of the universities, and this is a positive sign. I mean, I have the underlying concerns that they have a lot of individual users that are non-paying users, but at the same time, Dropbox is taking steps to remedy this problem and to target and convert more enterprise users. Another concern that I have is that there are a lot of big brand names that are competitors in the space, like Microsoft with Microsoft Teams and with the Microsoft OneDrive storage, and Google with the entire Google Drive suite, but also with the cloud storage option. So this is another concern that I have, is that competition is very fierce in this space. And finally, a more serious concern that I have, but that could be solved by Dropbox in the future, is that I don't see a moat around Dropbox. I don't see that people are raving about Dropbox as a product or as a service like it happens with Apple and in some cases with Microsoft. Dropbox's brand moat is not as strong, even though Dropbox lists its brand as a competitive advantage. In my opinion, is still a very weak moat at the current time. If they improve the smart workspaces in such a way that people start raving about the product, well then it could change in the future. So I'm really looking forward to see more improvement in the mode section. Let's move on to part 3 and look just a little bit under the hood at the financials. I don't want to bore any of you to death, so I'll keep it very short. But we have to look at some of the financials to see if Dropbox is a healthy business to put our hard-earned savings into it, because otherwise we risk losing our investment, our original investment, or we risk a big decline in the price and therefore in our investment, and that's something that we should avoid at all costs. While I may lose 60% of you at this section, I would do you a disservice in the long term if I would not tell you just a few things about the financials. Dropbox is trading at a 23.7 forward PE with a PEG ratio of 1.07. This tells us that we are not yet overpaying for Dropbox. The forward PE is very much in line with the forward PE of the S&P 500, but more on that price and valuation in the final section. Revenue grew at 14% year over year from 428 million to 487 million. The average revenue per user went up by 14% year over year, and the annual recurring revenue, or ARR, went up by 12%. I'm telling you all those spooky numbers because they are very important metrics in a SaaS company, a software as a service company like Dropbox. These numbers can tell you a couple of things, but I'm going to focus only on one. Users are enjoying the products offered by Dropbox and are willing to spend more money on the products and the services offered by Dropbox. And this should be a very positive thing to hear as an investor. Taking a brief look at the balance sheet, Dropbox increased its cash and cash equivalents position to 1.2 billion. Another thing that I like about Dropbox is the fact that it has a zero long-term debt. Also, from the cash flow statement, we can see that the net cash provided by operating activities increased by about 15%, and this tells us that Dropbox is actually increasing the revenue from its products and services. Alright, enough with the numbers, please don't hate me for this. There are a few catalysts that might move Dropbox beyond a 2 GB cloud storage business. The new smart workspaces ecosystem looks neat. If Dropbox is able to change the perception of the consumers from what it was in the past, a mere 2 GB cloud storage business, to what it is now, then this change with the smart workspaces could lead to a higher conversion from non-paying to paying users, but it could also lead to new customers, like new enterprise customers for Dropbox. The neat interface of smart workspaces and the relative ease of use of the platform could bite some market share from Microsoft Teams. If businesses and individuals see that it's much easier and much more intuitive to use the Dropbox ecosystem, then this could lead to additional market share from what Microsoft Teams offers. Even though Microsoft Teams has a huge moat because the big corporations are tied in the Microsoft ecosystem and everyone is already kind of locked into their ecosystem, and there aren't many businesses that could be willing to switch from Teams to something else once they already got used to the Teams ecosystem, even though it might not be as easy to use as Dropbox. After the Slack Salesforce acquisition, there are rumors that Dropbox might be the target for an acquisition. The rumors already started to kick the stock price above $20 per share. Dropbox stock is up 8% in pre-market already after a 6% run-up on Friday. If we look at some technicals, the after-hours price already broke the 23.5 resistance level and is heading for the 25.51. If it breaks the second resistance, it could go very well into $30 per share. The acquisition news is pure speculation, but the stock seems to be moving on the rumors of a possible acquisition, and the share price already broke one resistance level with this piece of information, and it could also break the second one, which could be another catalyst for the price or for an increase in price. Finally, what am I doing with all this information? Well, it's very tempting, I have to tell you. I was looking at Dropbox briefly a few weeks ago when it was trading around $18 to $19 per share, but I decided to not do any additional due diligence on the business. After doing additional due diligence, I discovered a lot that I did not know about Dropbox, but also the fact that at $18 to $19 per share, it offered a decent margin of safety, taking into consideration a 15 to 20% growth in the future. I'm kind of salty for not doing additional due diligence when I discovered the stock at $18 to $19, but it is what it is. It's gone now. I'm still debating if I should get in at $22 to $23 if I'm still able to get that number. So I might be placing a limit order at $23 to see if I can scoop some shares before the market opens. But if it goes beyond that, then I'm probably not going to get in. Let me know your thoughts in the comments below about Dropbox and what you want to see next. Alright everyone, I want to thank you so much for watching this video. I hope you enjoyed it and you found it useful. If you did so, all I ask you is to please smash the like button for the YouTube algorithm. Feel free to subscribe if you want to see more analysis like this one and to learn more about personal finance and investing. And until next time, take care, have a wonderful day, and don't forget that you are amazing.